So, it's not always the biggest profit, the biggest trade that I get excited about. Today, I only made $100, but I was only risking a small amount of money, and I had a beautiful trade setup. There's probably a little bit more money on the table that I could have waited for, been a little bit more patient, but still had a really good setup, had a good read. I'm going to show you guys the setup, the chart, and all that fun stuff right here in this video. Let's get into it. What's going on, guys? Patrick here. Like I said at the beginning of this video, it's not always the biggest profits, not always how much money you make trading, but sometimes you just get a really good read, you get a good setup, you make the right choice, you make the right trade, you get in, you get out, you take your profit, you go and you do something else. That's what it's all about. Little winners add up over and over and over. Just a little bit of profit every day keeps your account growing green, green, green. So we're going to show you guys the setup and the trade right here, and we're going to jump in the charts and look at all that fun stuff. Let's dive into it. All right. So right now we're looking at the Interactive Brokers workstation. This comes with Interactive Brokers. If you use Interactive Brokers, there's a link down below to learn more about Interactive Brokers and also learn about their free scanner that you can scan different sectors to find different stocks based on different criteria for different investments that you're looking for. If you're looking for gold stocks, you're looking for energy stocks, you're looking for medical stocks, you can do it with the Global Analyst Scanner. There's a link down below. So right now you can see over here on the right-hand side, we've got the 438 call options, the 440 call options, and then these 437 puts that I also bought and ended up selling. You can see I basically lost around $1. It was like $5 after commissions there on those puts, but we ended up making $90 on these 438 call options and then $29 on one 440 call option. The thing about this is I ended up selling these options right here at the 220 area. I bought down here. Look at this move now. It went almost all the way to $3. So I left a little bit of money on the table, but I'm still happy that I saw the read, I saw the setup, I made the trade, I got in, I got out. At the end of the day, if you're going to be trading options, stay away from really far out of the money options. When I bought those 438 call options, the market was at 437. So we're very close to those in the money options. If I went and I bought, let's say, the 450 or the 440 options and the market moves up, it doesn't always mean you're going to get a huge move in premium on those really far out of the money options. Just because the market is moving up, it's a lot different volatility based on kind of how close those options are and the realisticness of those options actually ending up in the money. Don't always think that buying the cheapest options, like buying really cheap call options that are really far out of the money, is the best idea for trading options. If you're going to be trading options, the best thing to do is to trade the options that are close to the money, in the money. And that means, like, if right now, like the market, let's say the market's at 439, well, then I could maybe buy the 438 call options, the 439 call options, or the 440 call options. I don't need to go and buy 444 call options if the market's at 439. All right, so let's pull up the chart here on the SPY. You guys can see kind of what I was looking at, the overall setup. So right now the market pushed all the way up here to 430, almost 440. If we look where we were at when I was buying those call options, so we had this area of support. This is the 5-minute chart. We're going to switch over to the 15-minute chart here. This is what I normally am looking at. What I like about this setup is the market pulled back. It got below the EMAs. It got then above the EMAs. One thing I want to talk about as well is multiple candles closing above EMAs, right? That's what we want to see. We want to see multiple candles closing above those EMAs or the support levels, resistance, vice versa. If the market pushes above resistance, we want to see multiple candles closing above that resistance. And that's kind of what we got here, right? We had this 437 resistance earlier in the morning, kind of holding it down. You can see pretty much like right across there, that 437 acting as resistance. Multiple times, market pulls back, it pushes up. And then, guess what? We pushed above that resistance. And then, what do we get? We got multiple candles closing above that resistance. We got this candle closing, got this candle, this candle, this candle. We got that pullback, and this is exactly when I ended up entering. I ended up buying the 438 call options when I saw, what did I see? I saw that previous resistance turned into support. 437 was holding. The bottom of this candle is 437.04. This candle right here is 436.99. That's pretty darn close, my friends, to holding that 437 level. If you can see what happened after we held there, we had a huge move up to almost 440. I ended up taking profit on this big green candle because, like I said before, I'm not going chasing waterfalls. And, you know, that's one of the things that I've had troubles with in the past is I'm always trying to, like, I got to make $1,000 off this one trade, right? Like, I got to make $1,000 off one trade. And that's not always how it works, right? It's just not always how it works out. So the market was above the EMAs. I know, number one, that the market is bullish. We have this big green EMA cloud there. This is the Ripster EMA clouds. If you want to learn more, I think it's on TradingView. I'm not sure you have to pay for it or not, but you can search in the indicators. You go up here, you search Ripster EMA clouds. It'll come up Ripster. Yeah, there you go. Ripster EMA clouds if you want to check it out. It's not mine. I just found it on TradingView. Been using it. I really liking the idea. It's cool because you have the EMAs here in the sense that, okay, like when we have this big green band, we know the market's pretty bullish, right? It's pushing higher. But then once that band turns red, like you can see, if you look back here a couple other days, like when the market turned from that little green band to red, it was just red, red, red for the rest of the day. And we never got a reversal there on that big EMA cloud there changing. Again, the other day, big green, stayed green pretty much all day. Here you can see it was green and then the drop and then it went back to green later on. But in general, I like the idea of those clouds because it gives me a pretty good idea like, hey, if this is green, I mean, the market's pretty bullish, right? So I should stay on the bullish side of those trades. So we get the big push up. Those options obviously rise in value. If we look here at the options themselves, I ended up buying down here. Remember, we had that pullback to the 437 level. I bought down here at the, I think I bought at $1.73. So right here at $1.73, almost had a 100% move there up there to $3. I ended up getting out here on this little, we got stuck. And you can see that as well on the SPY, kind of where that was at. Now, the thing that I want to point out here as well is with options, you got to remember what you're buying is a options contract to buy the stock at a later value, whatever the expiration is. So I'm trading tomorrow's March 18th call options that expire tomorrow. So if I'm buying the 438 call options and they're trading at, let's say, $2 and the market is only at 438, there's no premium there, right? The market is pricing in the idea that tomorrow that these options are going to close in the money and the market's going to be, 440, 441, 442, and or possibly higher. So we need the market to make a $2 move over 438 for me to profit at that point. If I'm paying $2 for these call options and the market is currently at 438 and, well, the market doesn't move any higher, these options are going to bleed out and it's going to get to a point where these options are going to be worth maybe 10 cents, maybe 20 cents based on whatever kind of the difference is in that premium. So that's one thing to remember, and that's one thing to focus on when you're looking at the options as well. If you're going to be buying out of the money call options, you better make sure that you're looking for a big enough move that those options are going to be deep into the money at a certain point because you need that premium to make money here, right? Just because an option is cheap does not mean it's a good investment. If you can go and buy a 450 call option that expire tomorrow, you can definitely do that. But I guarantee it's not going to be a good investment unless the market just goes crazy and goes to like 455 tomorrow, which that might be a little difficult. Now, one thing that I also want to point out here, another thing that I want to look at here is let's kind of think about how high could I think this move was going to go today, right? So if we look here on the daily chart, remember this obviously wasn't this high earlier. We can see that if we go and we look at the daily chart, where is the previous resistance at? This previous resistance really is like right here at the 440 area. And I ended up getting in there when we were at 437. So I know there's about a $3 move to that next resistance. And that gives me a pretty bullish thesis to buy those call options, thinking that if we move $3, obviously those option contracts that I bought for $1.70 are going to move, around $3 based on the overall market moving higher. And again, you got to think about the premium. You got to think about the actual move here. How high can the market actually move before tomorrow? And well, knowing that there's resistance at that 440 area, that's a pretty good indicator like, hey, this market, has a good chance to move up to 440. After that, we don't know for sure. Is it going to go higher? Is it going to go lower? What really will happen after that? We don't know, but we do know by looking at the daily chart that there is a clear resistance at that 440 level. So that should be kind of our expected target. Obviously, I ended up getting out a little early on the trade, but again, I'm taking my little base hits and I'm running, baby. I'm not mad about it. All right. One thing I want to point out here is look at this before. We had a kind of a double top there at the 457 level. The market was kind of bullish, trying to push up there. And then look how big of the drop was after. So now the question is, does the market push to 440? And then maybe we start to think about buying put options that the market might turn back down and want to run all the way down here. I mean, to get a move from the 440 area down to 416, oh my gosh, that is some money to be made right there, my friends. That is some money to be made. You can make some serious money buying those call put options. If let's say I buy 440 put options and the market moves all the way down here to 415 next week, I mean, there could be some really good money to be made, especially getting a move from like this the other day, 432 down here to 419. Woo! That's pretty awesome. But let's go back here and just kind of look at this setup one more time. So you can see I bought the 438 call options, locked in $90 in profit there, and then 440 call options. Look at these 438 call options. I paid $1.73 for them. They ran all the way to almost $3. Wowzers. Wowzers. So, moral of the story is, just because an option is cheap does not mean it's a good investment. Another moral of the story is, if a trade isn't working out and you see the market's just not moving, it's not going where it needs to go, well, then, get out. One more thing I think is really important. It's one thing that I have not really, I didn't learn this for quite some time. With options, all right, let's say right now, all right, so the market moves from $1, well, the option contracts move from $1.90 to $3. But if you look here at the actual price of the overall market, we look at the 15-minute chart, you can see from here to here, we moved from 437 to 439. We had that big spike in those options when we were up here at 439, and now we're pulling back 438. If we go and we look at the value, we went from $3 down to $2.40. So we lost almost 60 cents there in the premium when the market pulled back. The thing about this is, if the market kind of goes sideways here, the premium is going to get eaten up. And tomorrow, these call options that are right now trading at $2.40, if tomorrow the market opens at 438, these call options are going to lose value really quickly, and they can actually drop in value. Even though the market moved above 438, the call option went from $1.70 to $3. You had that huge move. That doesn't mean that the option contract is going to hold that value, because now people might be expecting that, oh, wow, this might not push above 440. So tomorrow we might only close at 439, and there might only be about $1 in premium there, while we're trading at $2.37 right now for that call option. So tomorrow, these call options could easily be back down here to the $1.40 area, even when the market really is at that same area. You're pretty much at that same area. Earlier, when the market was here at the 438.90, 439 area, these options were trading almost at $3. Now, people might be thinking, okay, I'm taking profit on those call options, or they might not think that we're going to get a big enough move to cover the premium on those call options. So that's one thing to think about as well. You'll see big spikes in the premium when the market is moving higher, but then when the market goes sideways, you'll start to see the premium start to kind of dwindle away, because now people are thinking like, this might not be good. When the market's kind of going sideways, these options start to lose value, even though we're still really at that the same price. The market is the same price, but now the option contract is starting to lose that premium value because we're consolidating. Even though earlier, like I said, when the market was up here at the 439 level, these options were trading at 270, 260. So very kind of something to think about. That's one thing I've learned as well, is I've basically seen big spikes in options. I've held through those options, and then the market kind of consolidates. We lose that value. I mean, that's almost a 70-cent drop there. So for one contract, that's $70 that you've just lost in premium off of that one contract, because you're just holding it, even though the market's still really at that same point that it was earlier when it was trading at $2.80. So something to think about here. And it's very, I think, important to understand how these options are moving. Obviously, I'm no expert by any means, but kind of learning as I go. Another benefit for the options is, so that's almost like a 20% return on that $500 investment. And a lot of people think that you need thousands and thousands of dollars to trade options. You do not. And think about this. I bought it at $1.73 and I got out with $9 in profit. If it would have ran all the way up here to $2.90, I would have walked away with like $300 in profit because I would have made about $1 in premium on those call options per call option with 3 call options, $300 profit. So you can see I got out really early on these call options and I still walked away with about a 20% return on those investment, on that $500 investment here on these call options. So you do not need a ton of money to trade options. You don't need a massive account. You can do it in a cash account. You can do it right here with Interactive Broker. So really kind of, if you're on the fence about learning more about options, start to kind of do more research and learn more about them. You can trade them in a simulator if you want and kind of figure out which way to do it, how to do it, and all that. But at the end of the day, don't go one, I think, but at the end of the day, my biggest tip for you guys, if you're going to be trading options, stay away from out of the money call options. Focus on money options, options that are right there in the money, all right? So I still got a lot to learn here with options and hope you guys are enjoying the ride so far. If you haven't already, hit that subscribe button, hit the like button, all the buttons down below. I will talk to you guys later on.